Thank you very much. Before I start my presentation and my discussion, I really want to thank Aidan, Javier, and Stefano for coming here. The original thought is to share experience, as Aidan mentioned, but we're learning a lot from each other. Just to remind you, it's Ireland, Spain, Italy, so we're learning from them. We understand what they're doing, and we're building bridges to share common thoughts and common solutions, because we do have common problems. So again, thank you very much, not only for coming in today, but also for all the time that we spent over the phone explaining to me what happened in different countries. So coming to the issue of private debt in Greece, I think, first of all, we need to understand that private indebtedness in Greece is not high in terms of size. So if we compare private debt in percent of GDP with the rest of the euro area countries, we're not that high. We're below euro area average. But the problem, where does it lie? It lies on the issue that we cannot service our loans. So the NPLs, the non-performing loans, so the servicing our debts is very heavy because of the long recession that the economy has gone through, but also the mismanagement, the political mismanagement of private debt during the crisis made the burden very big. We do see a slight decrease of private debt in arrears in terms of total private debt, very slight, 66% in 2017, around 63.6% in June 2022. So basically, the weight is there. And we have tax authorities with a big burden, a lot of arrears. We have insurance funds, we have NPLs in servicers, but also in the banks. What have we done? What have we done? So the securitization scheme, since this morning, I think many people have mentioned that. It was this scheme, a successful scheme for the banks to move out of their balance sheet the NPLs. So the result is the upper graph, where you see the dive of the NPL ratio in the banking sector. But that's not the whole story. The whole story is actually the graph below, that you see that NPLs remain in the economy. They're just shifting from the bank portfolio to the services portfolio. So the problem is not really solved. The second thing we have done is the insolvency framework, which we're taking pride that it's state-of-the-art in terms of the legislation. We're working very, very strongly, and we put a lot of effort, all the servicers, the banks, and us, the ministry, to make this out-of-court work out. Stefano mentioned that, is a change in culture of resolving our differences, of finding viable solutions. So we do have, since April, a quite strong inflow of applications and a quite strong completion of applications, because there is a lot of potential waiting in the OCW to be resolved. Is more than 20 billion is in the stock. In terms of complete workouts, you see there is a clear dynamic, there is a clear positive monthly progress. It's small, the number is small, but we continue, and we are really committed. We're working with our stakeholders, which is the services and the banks, to have a quite ambitious target over the next 5 to 6 months, reaching hopefully 1 billion euro in terms of settlements. The overall picture, however, in restructuring, in this huge NPL portfolio, wherever it lies, there is a still very, very long way to go. You see that from now we can have around 40% of the NPLs are more or less restructured. What does this mean? It means that we have a long way to go. So we need to use our tools. We need to use the OCW. As you can see there, OCW represents a very slim line, 242 million out of the huge portfolio of non-performing loans. So we need to use our tools. And it's not only the servicers that we need to work with them, but also the banks. At the same time, what else we need to do in parallel and colleagues have mentioned that before me. Financing, financing, financing. So we need to tackle the local equity market capitalization. Here I'm using one of the very nice pictures that Chris Allen used in the nice event we had about the capital markets. We need to strengthen capital markets. That's why we're working heavily on that. Why? Because when companies, so one tool is to restructure, the other one is you need to bring new capital, new money, new equity for them, new sources of financing. So the first one is the National Strategy for Strengthening Capital Markets, and especially fintech. And the second one is tackling low loan-to-deposit ratio. I have to say that I was a little bit surprised during the bank's discussion, where I have the sense that they were a little bit more optimistic than I am. I truly believe that the banks have a long way to go in order to restore this loan-to-deposit ratio. The economy is growing, but the credit growth that we see there, it looks to be on the low end. So we need to work all together to restructure, clean up our economy, to restructure the variables, find out what is the zombie and not zombie companies, and provide financing. This is the only way. It's one system that it needs to work. And it needs to work means that the banks need to understand and clean up their part. Servicers, they need to do their part on restructuring. And the ministry, and of course the state, needs to be there to create the appropriate framework. And what does this mean? What are we doing? Is A, we're restoring information asymmetry in order to provide better information for the banks, for the lending, which is the Central Credit Registry and the Public Credit Bureau, a law that was just passed by the Parliament, that would give access and full information to creditors to make sure that they are making the appropriate credit decisions. But also revisiting the framework for non-banking lending. This is a big discussion that we're holding with our counterparts also from the other countries. And that would possibly create additional channels for financing in the real economy. I will stop here. Thank you.
Thank you very much.